there. So it was actually increasing the burden of the customer. He was first pay 70,000 rupees tax. The Maruti is going to, charge the tax, and finally they are going to levy another tax, 1 lakh to the customer. So the overall tax was 1 lakh. It's a very simplified way of telling you, but it was little bit not as that easy what I have explained. Okay. So the customer was paying 1,70,000. Assume that in the earlier regime. So now that is all gone. So all the taxes, they are called pass-throughs now. Only the final customer is going to pay the tax. All the pass-throughs will be availed as an input tax credit by the chain of people who are passing goods from one person to another. Like a manufacturer gives it to wholesaler, wholesaler gives to distributor, distributor gives to retailer, and retailer gives to the customer. So all taxes which they pay, everybody has to pay a tax, okay? Because they are adding value to the goods, okay? Assume that everybody is valuing. Like, Maruti is adding value while they're making a car out of all the things which they are sourcing from so many suppliers, okay? So their tax will also include the value added. So tax will go up. But whatever tax which have been collected, they will take a credit of that and pay the lower tax. So we are going to do some questions also, so you'll understand that. So just hold on with your questions at the moment and it will be answered. So GST Council. So GST governing body with power to take decisions on rates, exemption, threshold exemption, etc. with 33% voting power on union government and 66% power lies with the state government. So the central government will have 33% voting right and all the states will have 66%. Okay, all the states put together. So there is a GST council which is called the GST governing body. They meet regularly and try to streamline the taxes, either reduce or increase whenever they feel like. Okay. So GST is levied on supply of goods or services or both in India. It is applicable with effect from July 2017. So that came into India from July 2017 and the best part was Jammu and Kashmir was not exempted. It became part of the GST. Now most of the laws in India were not applicable to J&K. And that this was one of the first law which came which have no distinction. All the laws were applicable to whole of India. There was no exception. So Jammu and Kashmir was also becoming part of the GST. So you can just go through this a little bit. So when you are you are giving a land on lease to someone, okay? So you have to pay tax on that, okay? So that is also become part of GST. Treatment of goods, import of goods. So everything has become now under GST, okay? You can just go through. If you don't find difficult, you can ask me question later on. So it's not very important now. This is how the old scheme was there, how the new has come, which I have explained you in much detail, so it doesn't require much of explanation. So dual GST. Now we have dual GST. Okay. Dual GST means that the state government and the central government both levy GST at the same time. The state governments were not very happy. They never wanted to lose their tax right. And they never had, the confidence the central government is going to collect and then pass on that tax to the states. Okay. So they said that we will also going to lay. Suppose the tax rate is 18%. So the state is going to collect 9%, central is going to get 9%. So you pay GST and CGST. Whenever you eat outside, you'll find there are two components of GST. Yeah. So one goes to the central government, other goes to the state government. Okay. Fine. But the person who is paying, he has to make only one return. It's all centralized. Okay, I'll take you to the portal also how do you handle that. So the central government, state government will levy GST simultaneously on a common base, that is supply of goods and services of both. Is that okay? So, many countries already had that dual GST in the system. Okay, like we have in Brazil. Many countries in the world have a single unified GST system, a single tax applicable throughout the country. So we didn't go for that. We had gone for a model where, where like Canada, Brazil, so they have a dual system like we have, because there's a federal states and the federal countries like Brazil and Canada have a dual GST system. In India, a dual GST is introduced whereby the central goods and services tax, CGST, which is called the central levy, and the state goods and services, which is called SGST. As you are saying, there are two components. When you have to, when we buy something, we'll have two taxes on the taxable value of every transaction for supply in goods and services. So this you're already familiar because you have seen this on the invoices. When you eat outside, Okay, now of course, I mean, eating you have to pay only 5%, so there is no SGST, I don't know. Or if you buy some sweet or somewhere, you will find that 2 taxes are there. On restaurant also, I'll talk about, cafes and restaurants, what is the tax system, how the GST is collected, but that's later on. So we have the intrastate taxable supply. Whenever the goods are moving within the state, interstate when the goods are moving from one state to another. And then when you are importing goods from outside. So there can be 3 events. One, when the goods move from one state to another, that is the interstate. Then the goods move within the state. And third is when you are importing goods from outside. So excise and service tax will be known as CGST. So earlier this was collected by the central government. Remember, the excise duty and service tax was going in the kitty of central government. So now it will be called CGST. So this is what the central government had given up, so they were getting CGST. The state was getting all other taxes, octroi, anti-tax, sales tax, local VAT, so everything become CGST. Is that okay? So all other laws were taken care that anything which is produced, manufactured and sold, so there will be CGST and SGST. Earlier, there were different taxes, they were being collected by one by central government, other by state government. Now there will be only one tax and it will be called GST, which will have 2 components. Okay. Then we have interstate. So interstate, when the goods were moving from one state to another, there was something called central tax, sales tax. Okay, central sales tax, which is called CST. It was 10% or 4%. 10% when the goods were being bought by another. Suppose I was getting goods from state of Gujarat and I am just a consumer, I have to pay 10%. But suppose I am a trader, if I was getting goods from Gujarat, I have to pay only 4% because I am going to sell it to someone. So I have to give a form, a C form to the Gujarat person, and he will now know that because I am just not an ultimate consumer, I am just consuming that goods for selling again. So he will charge me 4%. So that CST has become now IGST. So if the goods are moving from one state to another, then it is called IGST because it was a central government revenue. Here, nothing is going to the state government. So it will have no 2 parts. Everything will be equivalent to the CGST and CGST. Suppose there is an 18% tax, entire 18% tax will be collected by central government through a mechanism or through the jargon called IGST. So if you are getting goods from other state, one state to another, you have to pay IGST. There will be no CGST, no SGST on the bill. It will be simply IGST. I will give you an example to understand. Then if you are importing goods from outside, you have to pay custom duty. You still have to pay custom duty. It is not part of, but the CVD and SAD will be charged as IGST. If you are importing something from outside, you have to pay custom duty as well as IGST because the 2 components of CVD and SAD, which will be a central government levy, they are now going to the central government in form of IGST. So IGST is the pure central government revenue, and here the 2 people are sharing the revenue. Okay, fine. Okay, some example will be given so that you can understand easily. Okay, and now the examples will be coming very soon. In case of intrastate supply within the state of UT, CGST will be payable to the central government and SGST is payable to the state government, or it will be UT GST. Suppose the goods are moving from one union territory, it is and going to another place, so it is called UT GST. Instead of CST, it's called UT GST. Okay, like suppose you are buying goods from a union territory. Of course, not Delhi, because Delhi, though it is union territory, but it's again SGST there because they have they are considered as state for the purpose of GST. Like Pondicherry, it's a union territory. There you will find on the bill UGST and CGST. Instead of SGST and CGST, it will be UGST and CST. Okay. Now, area up to 12 nautical miles inside the seaport is part of the state, whichever is the nearest. Okay. Now, let's understand through examples. Consider the following transaction. X of Jaipur sells 10,000 units of an article at the rate of 210 per article. Purchaser is Y of Ajmer. So this is Jaipur and Ajmer within the same state. Okay, fine. And the GST is say 12%. This is intrastate supply and supply within Rajasthan, GST will be shown as follows in the invoice. Now, the person is going to raise an invoice. And how the invoice will look like? Taxable value of supply is 210 into 10,000 units, 21 lakhs. So, he is going to chase CGST 6% and SGST 6%, Rajasthan in bracket. So, this is the money going directly to Rajasthan government in form of SGST, and CGST is going to central government. So, total amount will be 23,52,000. Is that okay? So, this is the invoice which he is going to raise if the goods are moving within the state. So, we will have both the taxes coming up. Now, if Act does not have any input tax credit, okay, suppose he is selling directly to the customer, the central government will get 1,26,000. Likewise, the state government of Rajasthan will get 1,26,000. X will remit these taxes through the internet banking by using the same challan. So, that means he is going to pay the whole amount, okay, going to the GST portal and deposit their money. And it will go to the respective places. The money will go to central government and to the state government. There is one portal, one administrative software which is going to, where we have to file your returns and just clearly mention how much is GST and how much is CGST. I'll show you, I'll take you to the portal and show you that, okay. So he is going to deposit full amount if he doesn't have any input tax credit, meaning that means he is selling to final customer. So, final customer has to pay the taxes. So, he is not a manufacturer, so that he, or a middleman. So, he is going to simply pay the tax to the central government or the state government. Suppose in the above case, the seller acts and purchases Y in Chandigarh, GST will be as follows. Now, if it is Chandigarh, which is a union territory, so it will be CGST and UT GST, Chandigarh, 6%, and total amount will be 23,50,000. Is that okay? If suppose the sale is happening, say, in Chandigarh itself, okay, fine, is that clear? So, Chandigarh is a whole one union territory, so the goods is moving within the union territory. It's not moving like Ajmer to the thing, both not part of Rajasthan, they were the part of Rajasthan. Supply from one state or union territory to another state or union territory is intra-state supply. In the case of interstate supply, the IGST is payable to the central government. So, this is very clear, okay. Now, another example, X of Maharashtra sell 10,000 units of an article at the rate of 210 per article, purchaser Y is of Karnataka, okay. Now, the goods are moving interstate, isn't it? Earlier we saw the example of intrastate, now it is interstate, okay. So, that means IGST will be payable, the tax will belong to the central government. So, this is an interstate supply, that is supply from Maharashtra to Karnataka, GST will be shown as follows, okay. So, where again 21 lakhs, because 210 is the unit price and 10,000 is the units sold, and it will be shown as IGST, and total amount charge will be 23,50,000, same amount, because, but here in this case the goods are moving where? From one state to another. So, if Act does not have any input tax credit, the central government will get whole amount, okay. X will remit these taxes to the internet, and revenue from IGST will be apportioned among the union territories and union and states. Now, whenever the central government collects money, when they are collecting the CST, which is a central sales tax, they were sharing with the central state government, because goods are moving from one state to another state. Central government is just a person, a middleman who is collecting the amount. It should belong ideally to the states. So, the central government collects the money and then passes on this money back to the states, okay. But the money will be collected and it will go to the coffers of the central government, and then they will distribute it to the states, to the mechanism which they have set in the GST law. So, GST has been structured in a way that the essential services and food items are placed in the lower tax brackets, while the luxury services and the products have been placed in the higher tax brackets. So, this has been the law where we have the basic goods may be totally exempt, luxury goods are taxed at the higher. Now, this was a kind of a tax system we had earlier also. If you buy a car or you buy an air conditioner or you buy a luxury car, you have to pay higher taxes. But if you are buying essential goods, the taxes comes low. So, we followed that mechanism. But of course, there was a lot of hue and cry, the opposition saying that this is very complicated, so we have so many taxes. Can we make one tax, one rate for everything? It was not possible. Can we charge everybody at 18% rate, whether it is a food grain or anything? So it was not possible. So opposition was just raising the point and trying to fool the public that is a very complicated system. Very, very complicated system in India. Because in England, we have only one tax. Of course, there is no income disparity among so many people, maybe in a very rich country. So you can do it. But in India, you can't have a single tax rate for everything, for all the goods. Okay. So GST Council has fitted over 1300 goods and 500 services under 4 tax slabs of 5, 12, 18, 28 under GST. So we have so many slabs, 5%, 12%, 18%, 28%. My son-in-law, who happens to be in England, of course, there are a lot of people who criticize the government, and he is one of them. Okay. So he was saying that in England we have such a beautiful system, and here so many taxes, so many things. When I checked, I found that in India the system is very simple and the best law which has ever happened. It's the easiest law. Of course, because we have complications, because we can't tax everybody with the same rate. Of course, that is a complication. But of course, because again the state government have not given the right to the central government to tax everything. So that's why the complication has arisen. If they would have allowed the central government a free hand to have only one tax and allowed to tax the diesel, oil and other products which have been left out of the GST, the things would have been far simpler. It's all the other states which have been becoming a kind of hurdle in the whole process. Okay, whether it is the ruling government states or the opposition states, everybody doesn't want to lose money because they have their own benefits and other things which they are going to lose because of that. So it's a very, very simple and a beautiful law. Okay, once I have gone through the portal and I was filing returns, I found it was very simple. When I'll explain, you will find it's the best law, best thing which has happened to the country after independence. And if somebody is trying to fool you that this law is not good, then I told my son-in-law and compared him that we are far better than what law which England is having. Okay, but all the complications we are having is just because of the creation of the system, because we can't do away everything in a single in a matter of just a couple of years. So it takes time to move into the new system and streamline and bringing very close. So this is aside the tax on gold, because one of my my son-in-law's another relation, I don't know what do you call it, son-in-law's sister's husband. He is a businessman. Okay, he is critical about GST. Initially, he said this has become very complicated. So now he was hearing everything from him. So he said it's complicated, without even checking whether it's complicated or not. It is not complicated at all. It's a very simple thing. This is aside the tax on gold that is capped at 3%. On gold, the tax is 3%. And on precious and semi-precious stones, that it is placed at 0.25%. So we have 5, 12, 18, 28, then we have 3 and 0.25. So that is a complication. Can we tax gold at 12%? We can't. Can we tax, item at everything at 28%? No. So we have to tax depending on what good it is, because that is the system we had right from the beginning. We have been taxing the rich people and taxing less to the poor people. So we can't just change that whole thing which was there from the last 60 years or 70 years or 80 years. We can't change them. And we don't have that kind of, everybody is having a similar kind of income. The income group is so much different. 0% on the goods like milk or wheat flour, so there is no tax. So certain goods are exempt, okay, which is, now if you want to really see all the details, I have given this thing, you can go to Paisa Bazaar, tax and GST rate, so you'll have the tax rate for each and everything. Then we have 0.25% on diamond, 3% on gold and silver, 5% on certain items, which I'm going to talk about, 12%, 18%, and 28%. So these are the slab rates. Okay. Now here we look 0.25% and 5%. 5% household necessities at edible oil, sugar, spice, tea, coffee. 12% includes computers and processed foods. 18% on hair oil, toothpaste, soaps, capital goods. Okay. 28% luxury items such as small cars, consumer durables like AC, refrigerators, premium cars, cigarettes, aerated drinks, high-end motorcycles are included here. Of course, they could have reduced it for the small cars. Okay, they are trying to do it. Okay, fine. But if they do it immediately, because they were trying to work out how much tax earlier a person was paying and how much he will be paying now. You can't bring it down immediately to a level of say 18 from 28. Suppose earlier the person he was buying even a Maruti 800, he was paying 28%. Okay. So here the government may lose a lot of money and the state governments are not going to get, so gradually the rate structuring has been done so that, all the goods which have become today's necessities, they will be taxed at a lower rate. Most of the goods fall under in the category of 5%, 12% and 18%, while most of the services fall under the category of 18%. So goods can be 5, 12 and 18 and services are mostly in 18 category, like telephone services or other things. GST is 28%, is applicable on some items like cement, car and tobacco. Okay. Like tobacco, cigarette, the tax was as high as about 60%, 70% in earlier time. Of course, today also you have to pay the same tax, 60, 70%, because there is something called cess over and above the GST, which I will going to talk. There is also a cess which is applicable on handful of goods like car, tobacco, pan masala, though they were called sin products. Okay. So earlier the tax rates of all these items were close to about 60 to 80%. Now they can't bring it to 28% with one stroke. Okay. They said, okay, we are going to charge 28% as the tax, but we are going to add another cess, which is going to make the tax at the same rate what earlier the people were used to paying. Like when you take a Coke, you consume Coke, you are paying about 60, 70% of tax in that. So that's okay to start with. Let's start with this common ground, and after 5 years we'll review and we'll remove the cess. Because the money which is collected as cess, which is called the sin tax, the money goes to the state government and not a penny is taken by the central government. Because state government said we were getting so much of revenue, we'll be losing. So they said we don't want GST. Then the central government found a solution that we are going to tax at the same rate to begin with. We are going to find a way around so that everybody, on all the goods, the taxes remain the same. Okay. So there were goods on which a lot of taxes are being collected, like cold drinks, car, tobacco, pan masala, everything. The tax will be very high, but it will be called cess now. And the cess will go away after 5 years. But those 5 years have gone. The state governments have not allowed the central government to reduce the tax. And now they have been deferred till 2026. So this, cess is still to be levied, but it will continue till 2026, and then they will decide whether they want to do away. Okay. So these are the taxes, okay, which I talked about. Again, this is the same. So a total of 81% of all the goods and services fall below or in 18% tax slab. So 81% of the goods are falling below 18%. Okay. So it's only 19% of the goods which are going to 28% slab. Okay. This means 7% items under the exempted list, where there is no GST, 14% items which attract 5%, 17% item attract 12%, 43% item attract 18%. With only 19% item fall under the highest slab, which is 28% in the new regime. This was exactly, trying to collect the same money before the GST was introduced in India. Earlier we had so many taxes. So government said, okay, we'll bring the new law. Nobody is going to get less revenue. States are going to get all the revenue. Okay. But to start with, we will like this and we'll try to improve. When we see that, that the tax revenues are growing, we have a wider tax revenue base now, we'll try to bring down the revenue. Okay. Because this is a new system, so they were also not very, sure that, whether the revenue will go up or go down. Because if suppose government was collecting 100 rupees earlier, both state and central, and now suppose the revenue comes to only 50 bucks or 60 bucks, it is going to be very bad for the country, because how they are going to run the state or the center. So they said, okay, we'll remain at 100 to start with. And because this new system is going to, increase the tax compliance, so that, the tax will not get escaped. Because there are a lot of a grey market where the tax people are not paying taxes, still it is happening. The system was supposed to take away that, grey market out of this thing, and everybody would be paying taxes. Okay. And it will improve compliance and increase the tax revenue. The tax revenues have gone up. Okay. Fine. And the state government is gradually bringing the taxes lower and lower, and they will bring it more further down. So 7% of the goods fall under this category, exempted goods. Okay, there is no tax. The 7% is that, which is now, besan, bread, salt, jaggery, chicken, eggs, bindi, okay, sindoor, kajal, bangles, and hotels and lodges with tariff below 1,000. So there is no GST on that. Okay. For interstate supply, so interstate supply means that the goods are moving from one state to another. IGST are nil, 0.25, 3%, 5%, 12%, 18 and 28. Okay. For interstate supply, GST will be 50% of IGST and SGST will be 50% of IGST. So that means when the goods are moving interstate, then 50% goes to the central government, 50% goes to the state government in form of two things. And IGST is only when the goods are moving from one state to another, then the government collects, the central government collects, it's called IGST. The rates are same, both the things. Okay. Besides, the compensation cess, which is collected on the sin goods, is applicable in the state of, in the supply of tobacco products, pan masala, motor cars, coal, aerated waters, like cold drinks, like that, Coke and all, etc. For interstate supply, now GST rates for supply of services. For interstate supplies, SGST is applicable. Now this, earlier it was on goods. Now on supplies also, the same kind of a thing, okay. So, generally the services are taxed at 18% mostly, okay. Some are at 12, okay, or 5. Moreover, a few cases services are exempt from GST. Some services are exempt also, okay. Compensation cess, I told you, okay. In addition to CGST, SGST, UTGST, IGST, GST compensation cess is payable on tobacco products, pan masala, motor cars, coal, aerated waters. If a state loses revenue because of the abolition of the central sales tax, the central government will pay compensation for 5 years. So this was decided for 5 years, this cess will be collected, okay, and will be given to the central government, will be given to the state government. So that's why, you find, sometimes Tamil Nadu government is raising issue that they're not getting their money. This is all about the cess. The government is collecting and they're saying we're not getting it. I don't know how far it is true or not. I don't know. I have not checked that. But a lot of central state government says that it takes time for the time when the money is collected and the money is handed over to and there has to be a lot of reconciliations done and it consumes about a couple of months before the money is passed out to the state.
So they're just not patient enough.
They are saying that we are not getting, because each state wants to offer freebies, free rice, free this, free that, free electricity. So they are in a dire state. They don't have money, and they're saying that so much of money they have to recover from the central government in form.
Tamil Nadu is at the top and taking loans from the central government.
They take loans, okay. So revenue generated through collection of GST compensation cell will be utilized for the payment of such compensation, okay. Fine. So imports of goods are subject to payment of basic custom duty and education cess and secondary and higher education cess. Besides IGST and CGST, compensation cess will be payable. Okay. Just read this. Who is going to read here? Can you read, Mokan? Right from the top here.
Import of goods is subject to payment of basic custom duty, education cess, and secondary and higher education.
Okay. So apart from the custom duty, there is something called education cess, which is about 4% in India, which is again levied whenever you file your income tax return. Apart from paying income tax, you have to pay 4%, 3% and plus 1%. 4% is another tax. So this was levied by one of the finance minister long back, and it's still part of the system. Okay. So because they said we'll make everybody educated. Okay. So this tax was levied. So it's still part of the system now. They're not done away with that. So once the tax is levied, it sticks with the system for long. They can't do away, because they're going to lose money. Okay. Besides
IGST and GST, compensation cess will be applicable.
Okay. Next.
By virtue of section 25(1) of Customs Act, exemption is available on certain imports from payment of basic custom duty by way of exemption notification. IGST has been exempted in the case of some such.
So, there are certain goods when you import something from outside, there is no import duty. When there is no import duty, there will be no IGST also. There is no CVD or, this thing. So, there will be no IGST. Okay. When the good is totally exempt from the import duty, then there cannot be another levy on that in form of IGST. Okay. So tax is payable. Yeah, read.
Tax is payable to both central and state government or union. However, administrative control will be exercised by either by the state government, union territory authorities, or by the central government authorities in the case of particular taxpayers?
So, the tax is payable to both the central and the state. Okay, you go to the portal and pay tax, UGST or CGST, it will go to the respective states. Okay. However, the administrative control will be exercised by state government, union territory authorities, or by central government in case of a particular taxpayer. So, wherever you are registered, so that government is going to take care of that you are, complying with all the laws. Okay, if you are in Delhi, then Delhi government is going to take care of the compliance. Okay. Just read.
Petroleum products like petroleum crude oil, hydrogen, diesel, motor spirit, or petrol, natural gas, and aviation fuel, turbine fuel will continue under excise duty.
Okay, इसका वो कहाँ है? पावर प्लग पीछे?
So,
हाँ? Okay, so petroleum product, that is आपका what's your good name?
Mukund.
Huh?
Mukund.
Mukund, just remind me, I have to just pack this.
Sure, sir.
This I have to keep in my bag, otherwise it will remain here. Then I will not be able to give lecture for